Time for the word on Wall Street. Top investors watching your money. Joining me right now, the Watchdog on Wall Street radio show host and Markowski Investments president. Chris Markowski is here. CFRA Chief Investment Strategist Sam Stovall is here. And Optimal Capital Director of Strategy, Francis Newton-Stacy. It is great to see all of you this morning. Thanks very much for being here on this Wednesday morning. Sam, kicking things off with you. We're looking at a little fractional move upwards this morning. Fractional moves, Dow Industrial's up 12 points after a big sell-off yesterday on worries over tapering and the uncertainty around taxes coming. The Dow down 292 points at the close yesterday. Tell me your thoughts on the macro story. You say the markets are awaiting a catalyst for another leg higher or a pullback. What will give us that catalyst? Do you see a trend? Do you have visibility for earnings and the macro story in the fourth quarter right now, Sam?
Well, good morning, Maria. Good to talk to you again. Yes, I think the market is certainly awaiting a catalyst for continuation or correction. We're coming up to the end of September, which would then close out the third quarter earnings reporting period. Expectations right now are for a 25% gain. That's certainly a lot lower than the 88% surge that we saw in the second quarter. But also, we started the second quarter expecting it to be up 60%. So I certainly would not be surprised if we ended up with much better than expected earnings for the third quarter.
For the third quarter, and do you think we've seen peak growth at this point, Sam? What's your take on the macro story fourth quarter and into 2022?
Sure. Well, I think we certainly have seen peak growth, but it doesn't mean that we are going to be seeing red ink anytime soon. When we had that 88% gain in the second quarter for S&P 500 earnings, also we're expecting to see a decline or a reduction in the growth aspect for GDP. 5.6% is our third quarter growth estimate, 6% for all of 2021, and then looking to 4.8% for 2022. So it's simply natural to have a slowdown in GDP growth.
Yeah, but growth is growth, so that's good. Chris, let's talk about what the headwinds could be for this market, and I'm talking about higher taxes. The House Ways and Means Committee will mark up and debate the Democrat proposal today. The Democrats in the House want a corporate tax rate of 26.5%. That's up from the current 21%. Goldman Sachs had a report saying that the higher corporate tax rate would cut S&P 500 earnings by 5%. Your thoughts on what's coming in terms of higher taxes? Could see a capital gains tax increase as well. Is that going to be a hindrance or a barrier for gains in the market?
Well, I think it's going to definitely be a bit of a hindrance. We all know that uncertainty is not very good for the markets. We can just go back to the Obama years and talk about the lack of animal spirits that we had coming with all the additional regulations and taxes at that point in time. I'm also not even taking a look at the large corporations. You want to take a look at the smaller businesses out there. That's the real generator of growth in this country, especially when it comes to jobs and just in regards to getting any sort of anything new out of the economy. When you're going to be hitting S corporations out there, pass-throughs, taxes, all of this uncertainty is not good for growth moving forward.
Yeah, and real quick, Chris, on the China story, what's your take on these casino operators? We've seen the CCP obviously crack down on a number of industries, and overnight it was the casino companies which are now expecting to see much more regulation. You look at companies like Las Vegas Sands or MGM Resorts International, Wynn, all down this morning. They have operations in Macau.
Yeah, it's interesting. Xi Jinping, he wants to be dictator for life over there. I think he's overplaying his hand to some degree. It's almost like he's threatening all of these myriad of industries out there where China should be playing the opposite side of the coin, where the United States is bumbling in Afghanistan. They should be saying, hey, look, we're the alternative to the world. All of these extra regulations are not good for them, but they are beneficial to us because, again, we become more attractive.
Yeah, that's a good point. Maybe he's doing the job for us in terms of limiting investment there. Francis, Amazon, what an incredible growth story here. It's planning to add 125,000 employees in the United States. It's lifting average starting salaries to $18 an hour. It's also announcing plans to open another 100 facilities across the country this month. What do you make of the Amazon story? Do you think other companies will begin hiring more for seasonal sales? And give us the backdrop in terms of growth within the economy. Obviously, technology and even retail is there.
Well, here's the thing. Amazon was clearly a pandemic winner. Amazon can afford these wage pressures moving higher, and Amazon is probably trying to get ahead of the wave of being the preferred vendor for Christmas. We still have the pandemic, and I think that they would rather pay more for their workers and expand while they can and while they have an advantage than lose market share or risk losing market share. If they don't have enough workers for Christmas, that's the risk. But the backdrop is that this mega cap story, these balance sheets are the least vulnerable to inflationary pressures, input costs going up, wages going up. And so these stocks are going to continue to outperform and capitalize on this environment, whereas it hurts smaller companies. And that's true also of corporate taxes coming up.
Yeah, but I mean, can you buy this stock at any price? The stock has obviously benefited from all that you're talking about as being a winner during the pandemic. It's pretty incredible. Look at this stock, where it is right now, 3,453. I wonder if we're going to see a split.
Well, we may. And the thing is if I have exposure currently, I would keep my exposure. I don't know that I would be buying or adding exposure at this price level because just generally speaking, the markets are overbought in the short term. And we do have a lot of risks that the markets are sort of trying to price in. Markets are vulnerable to surprises in the fourth quarter. Obviously, growth is slowing. Inflation, we may have seen peak inflation. We may have seen a peak in corporate profits and fiscal spending. Even though this package is huge, the rate at which it's moving into circulation is slowing, and now we have taper talk. So Amazon, like every stock, is vulnerable to this. But if you have exposure and you've done well, there's no reason to give it up at this moment in time.
All right, let it ride. Good to see you this morning. Thanks very much, Chris Markowski, Sam Stovall, Francis Newton, Stacy. Great word on Wall Street. Have a good Wednesday, everybody. Thanks so much.